We're going to bring in Larry Glazer for more on the news and the markets this morning. He's managing partner and portfolio manager at Mayflower Advisors. And Larry, I was looking through some of your notes. You say don't drink the Kool-Aid. Which Kool-Aid are you referring to in this instance?
Well, I never drink Kool-Aid this early in the morning. Look, we can all pretend that the monster rally we've seen the last 3 weeks has been driven by improving fundamentals in the economy, terrific earnings, but that would be drinking the consensus Kool-Aid. Clearly, that's not the case. Take yesterday, for example. Mario Draghi's dovish tone sparked the market. It was not earnings. Take today, the bump in the futures. Again, the rate cut coming out of China. So we have central banks driving the dialogue, getting us away from fundamentals in the economy. That's not a healthy dynamic. Look, when we see where the action, the rotation, the market is, it's the companies with the worst fundamental outlook that have been leading. It's energy, it's emerging markets, the most challenged sectors. That smells like short covering to me, not fundamental improvement in the economy. We want to see that fundamental improvement, but what in fact we're seeing is a political impact on the economy. And again, that gets us away from Main Street, that gets us away from the real economy, and that gets us back to central banks driving a conversation that's increasingly being driven by politics.
Yeah, but how do you fight the Fed? I mean, that's why we're talking about a global Fed now. How do you fight it?
We all learned the lesson is you don't fight the Fed, but you want to be sensitive to what is driving the market. We don't want to pretend what's driving the market. We want to be realistic and be honest. One of the things we do know is chasing stocks when they're up 10% overnight probably isn't a really safe investment strategy. So we want to take a step back and not chase in this market. But we also know that the end of the third quarter was driven by a host of technical factors. Things like window dressing really depressed certain areas of the economy, and it wasn't the end of the world. But likewise, we're probably not off to the races in the economy right now. And look, end of the year, we see one phenomenon that's always been reliable, and that is tax loss selling. Tax loss selling, you get one more shot at the apple, right? You get one more bite, and you get to look at some of these areas that have been weak, whether it's energy, whether it's commodities, whether it's emerging markets, and they get some selling pressure. Very technically driven, but that gives us an opportunity to be an opportunist, and I think that's what we want to be.
Do you believe that China cutting rates could help stem this massive deflationary spiral commodities are in?
I don't, actually, but I think that the free market will take care of that, not central banks. But I also think it's going to increase capital flows. And look, I'm in Boston. Everywhere I look, there are Chinese investors buying property in Boston. Is that fundamentally driven? They don't even live in them. They buy them just to park capital and get it out of China. We talk to some of these investors. Right. We see the limos parked in the street, and we say, oh, it's great. You're buying a condo in Boston. Are you moving here? No, no, no. It's just a place to park my capital and get it out of China. You're going to see more of that trend. It might be great for Miami real estate because Chinese money flows there, but it also gives our own Fed dovish cover ahead of a political election so Larry, that they don't have to take action.
With the market looking like it's going to open up much higher this morning, would you sell into what looks like at least an early rally?
Sure. We don't want to lose our heads, and we don't want to panic, and we didn't want to panic at the end of the third quarter, certainly, when it looked like the world was coming to an end, and pessimism was the highest level since the financial crisis. Likewise, I think we really need to look at earnings right now. Companies are getting a free pass when they blame currency. That's not really fair, right? They didn't attribute their gains to currency. Why should they have that excuse? We see it time and time again across the board, and the earnings are good, mediocre in some cases, but those that are a broad reflection of the U.S. economy are not necessarily showing broad gains. We need to get back to growing the economy and not just seeing stocks boosted because of central bank action.
Okay. Larry, thank you. Great to see you this morning.
My pleasure.
Appreciate your perspective. Always helpful.